Today we can learn anything on the internet. However, not every learning curve is the same, and that's why I'm sharing my various learning experiences. Keep in mind that I'm not a financial consultant, and this is just what worked for me. And with that said, in this episode of How to Learn Anything, I'm gonna show you 3 things to analyze in order to get better at predicting prices on the stock market. Alright, let's put 30 seconds on the clock. I'm gonna keep it very simple. So, if a company wants to increase its budget, one of the ways it can do that is by releasing new shares through the initial public offering. If people are interested in the company, they may buy them. And why would they do that? Firstly, to support the company's endeavors, secondly, to get a part of the profit through a dividend, or in order to sell them later on the stock market. And the company can expand with the newfound resources. Either way, everybody wants profit. Okay, but of course you can also buy stocks that are already on the market and try to earn money from them. But how do you do this? How do you learn to trade, and what should you analyze to succeed on the stock market? Well, that's what many economists throughout history try to answer. There are a ton of theories about the stock market, but there's one thing that everyone agrees on. In order to profit, you have to buy low and sell high. Today I want to recommend 3 things to practice analyzing in order to improve at predicting future stock prices. Technical analysis is one of the methods of predicting future trends. It's based on analyzing past charts, for example by looking at statistics such as price and volume. Technical analysts try to notice patterns, which are called formations. They often indicate an upcoming change of trends, and this process tries to predict that. Also, technical analysis is based on the assumption that history repeats itself. Basically, that price changes are not random, and the formations they create lead to very similar outcomes every time. Here are a couple examples of different formations. As you can see, this price pattern kinda looks like a head with 2 shoulders, or 3 mountain peaks. It indicates a change of a trend. It can also be in a reverse shape. The first one is called the head and shoulders top, while the other one is the bottom one. These price patterns are very similar to the first ones, as they also indicate a trend reversal. This one has 2 peaks right next to each other, pretty much at the same prices, while the second one has 2 minima with the same attributes. And this pattern also has 2 variations, a falling and a rising one. It is defined as having a contracting range in prices, coupled with having a trend. The end of a rising wedge indicates a price drop, while the end of a falling wedge is supposed to bring a higher stock value. It is necessary for an aspiring investor to learn about the popular price patterns and try to analyze them. You can do it as an exercise. Select a past period of time on a stock chart and try to predict what is it going to lead to. Write down your guess and reveal the next part of the chart. That's the first way of getting better at predicting stock prices. Fundamental analysis is the other popular method of predicting stock prices. Fundamental analysts look at external factors in order to evaluate the intrinsic value of an asset. For example, they may examine a company's financial situation or industry trends in order to predict if a given share is over or underpriced, and thus, what should happen to its value in the near future. So, how can you practice fundamental analysis at home? Well, today we have the access to all previous public financial statements and results of many companies. You can again select a part of a stock chart, analyze the given company's financial situation in this period, including the revenue, earning per share, projected growth, dividend, etc., and try to predict what's going to happen with the price of this share in the future. Remember, don't cheat by looking at the whole chart earlier, and keep in mind that you're going to improve with time, so keep trying. Alright, so 2 previous strategies used past statistical data for practice, but this method can be used in, let's say, real time. Basically, try to predict what's going to happen in the near future from now. 2 things that may help you are, firstly, the news. They have a huge influence on people's choices, because we, as humans, are emotional creatures. Most people make decisions based on their current emotions, and they are not rational at all. And the news have a lot of influence on how people feel in the given moment and a given day. Secondly, I recommend having a system of following your progress. You can write down your every prediction on a piece of paper and see what would be your result in real life. Or you can open a demo account. I really recommend it. If it doesn't have any hidden fees, it allows you to practice in real-world situations without any risk. So just remember to read the terms of service. Alright, thank you for watching. Remember that pretty much everything society does is based on emotions, and you can progress in things like investing with rational thinking and planning. Practice mindfully and remember it can go either way. Finally, don't take my advice as the absolute truth. Do your own research, and I'll see you on the top.